We are live from Bloomberg's World Headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Shanali Bassick. I'm stepping in for Kaylee Lyons. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, Coinbase laying off 20% of its workforce as job cuts at crypto companies continue to pile up.
Plus, it's been a brutal few days for Barry Silbert and his empire. Now his one-time business partner Cameron Winklevoss is calling for his removal.
And from lenders to miners, no corner of the crypto industry seems safe from the recent turmoil. We'll look for signs of recovery with Nexo co-founder Antoni Trenchev.
That's all ahead, but first let's take a look at these crypto markets because we have Bitcoin that is back on the rebound here. It's up 0.8%, almost 0.9% here. Ether, of course, following it north, up more than 1% on the day. You have Silvergate Capital Corp. Remember, I want to draw attention to this for a second here, up more than 2% on the day. A lot of relief here after a very massive sell-off last year and the beginning part of this year. Silvergate, within the crypto industry's lending woes, has seen a lot of pain because they're exposed not just to the exchanges here, but also the mining industry, which has faced a lot of pressure. Coinbase Global, remember, we've been talking about those job cuts there. Investors like it. They're seeing the stock up about 6% on the day, Matt, because some prudence here in the middle of a prolonged crypto downturn is what investors are looking for. I know you're talking more about it.
Yeah, Coinbase up today, but has fallen pretty substantially over the past year and actually underperformed Bitcoin since the latter's high. Now, I thought it kind of odd that the makers of picks and shovels would underperform gold itself. My good friend Katie Greifeld pointed out it's maybe because we've seen such a flat line in Bitcoin. I mean, not just since the implosion of FTX, but really it's been so stable since this summer, and that might mean much less trading, which is no good for the exchange. Coinbase has been trying to distinguish itself as a trusted and compliant company amid all the recent crypto chaos. The CEO, Brian Armstrong, spoke with David Rubenstein in December.
We show in our publicly audited financial statements that, corporate cash is separate from customer funds, and you don't have to take our word for it. A Big Four accounting firm has come in and proven that in these cases. We operate an exchange, but we've never created an exchange token like the way FTX did. We never operated our own market maker or hedge fund in the way that FTX did because we believed that that would be a conflict of interest. So the difference between the two firms, I think, cannot be overstated.
Now remember, Coinbase is just the latest company to announce another round of job cuts this month. Genesis, the troubled crypto brokerage under Barry Silbert's digital currency group, cut about 30% of its workforce. Huobi is cutting 20% of jobs, while Silvergate laid off 40% of its staff. Let's get more on the latest layoffs at Coinbase and others with Katie Greifeld. Katie, when you look at what's happening at Coinbase, is the bleeding over?
Is the bleeding over? I mean, it gets back to what Matt was saying, that, okay, investors are cheering this news about the job cuts, that the fact that they're cutting costs. This is TradFi stuff. You'd normally see a stock rally when investors welcome that sort of news. But this root issue remains. The fundamental problem still remains is that people aren't trading crypto. The trading volumes are way down. You have Bitcoin absolutely flatlining. That's still a problem that's going to continue to haunt Coinbase's stock. But again, it's being welcomed that this is a sign that they're getting really serious about costs.
Meanwhile, Barry Silbert's crypto empire looks like it's in trouble here. I mean, getting an open letter from Cameron Winklevoss and demanding details on whether or not they're commingling funds.
It's really fascinating to watch this play out in public, this very public fight over what happened. You have Cameron Winklevoss basically accusing them of fraud of some sort. So the latest is that, again, the big news was that Cameron Winklevoss today in another letter calling on the board of Digital Currency Group, which owns Genesis, which owns Grayscale, calling them to remove him as CEO. We have heard from Genesis, a spokesperson, saying that they're disappointed that Gemini has chosen to make misleading public statements despite productive private dialogue. So again, this is playing out in public, and it's fanned a lot of concerns over what's going to happen to DCG if you do see Genesis actually have to file for bankruptcy. It's been, what, 2 months since they halted redemptions? This has been dragging on for quite a long time.
Now, that is one giant in the room, but what about Binance? This report from Forbes about Binance bleeding assets, 12 billion gone. Put that into perspective, and what does that signal?
12 billion.
12 billion. It is the biggest exchange. So what's what kind of trouble does that spell, whether it's for Binance or the industry at large?
This is the existential question hanging over the industry. What happens to Binance? This is the biggest exchange left standing. And this great Forbes investigation, again, found that you actually have seen $12 billion come away from Binance in the past 60 days. Of course, we've heard from Changpeng Zhao on Twitter, CZ downplaying those outflows. But again, Forbes is saying that basically they've been of a much greater magnitude than Binance, than CZ is letting on. So whether this, spells the end of Binance or trouble for Binance, what this means in terms of industry trends of people perhaps moving away from centralized exchanges, this is going to be one of the big questions of 2023.
It's one I'm going to put to our next guest, Katie. Thanks so much for joining us. Katie Greifeld, they are talking to us about what may be the iceberg. We just saw the tip of the iceberg with Luna Terra, and now it looks like there's a lot more underwater. Joining us to talk about this is Antoni Trenchev. He's the co-founder of crypto lender Nexo. And Antoni, in some ways, you kind of look like the last lender standing here. What do you think about this, these existential questions? When we hear about $12 billion in outflows from Binance, don't you have to wonder about the future for centralized exchanges?
Well, not necessarily. Centralized exchanges, by design, they should have matching assets and liabilities. So if $12 billion were withdrawn, these are assets. If those match client liabilities, then there's no problem. The problem comes in when you have something like FTX that has been taking depositor assets and playing the markets, taking directional bets, proprietary trading, that type of stuff that creates the problem. Whether that has been happening on Binance, we don't have any indication that that has been the case. CZ has promised proof of reserves, a very detailed Merkle 3 type of audit that is still to come. This is what will put the speculation to rest. But don't just look at the numbers, but the overall context. Are those assets, liabilities that match up? And if so, then it's fine. But this is what we have to find out in the next months.
Even beyond that, I'm wondering how much industry behavior has become normalized. When you think about the intercompany loans that people were making within themselves and the way that, Gemini relied on Genesis and, where the money went after that when it comes in relation to DCG. Are there certain behaviors of this industry that you think need to change in order for things to really shake out?
I think the most important thing is around disclosures. The most important thing for your clients is to know exactly what they are getting themselves in. And in the case of Genesis and their arrangement with DCG, there was very clear that this is exactly what is going to happen. Trouble with FTX was that nobody knew that the assets that you were putting on an exchange to be there as balances in exchange were being lent to a hedge fund. So it is what I wish to see. This is where I think we at Nexo have excelled, are the disclosures of what exactly we are doing to generate that yield that we are paying out to you. And it ultimately, this is the way to bring the space forward, to have clear disclosures and to educate the clients as to what is happening so they can properly assess the risk that exist within the certain products.
Speaking of clear disclosures, tensions have been simmering, to say the least, between your company and Vault, which you want to purchase. You've accused Vault of not acting in the best interests of its creditors. How does that deal look right now? Is it on shaky ground, or do you think it's likely to go through?
Look, we think we have the best proposal on the table. The former CEO and management are very aggressively pushing towards a deal that makes less sense, that actually changed the whole fundamentals around what their clients signed up to. And this is why we said that we no longer believe that the ones that are leading the creditor committee have the best interests of creditors in mind. Luckily, it is not up to those people to determine the future of Vault, but it is of the creditors. Our offer is on the table. It will remain there for some time. So hopefully the creditors can make the right decision, because this is what will generate most value for them.
Are you concerned about fraud at Vault? This has been an allegation at other funds that have, or exchanges or businesses that have closed gates to creditors and to customers. Is this an issue at Vault as well?
Well, I'm not the one to pass judgment quickly, especially with regards to fraud. One has to be careful. We have gone through their financials, through their books. I think that what is missing, misplaced funds lost, we have a clear picture of that, or we believe to have a very clear picture of that. We have an offer which reflects all of that, and it makes economic sense, and we can see it through if the creditors would also like that.
There are certain businesses also that you've had to phase out after facing cease and desist orders from certain bodies in the United States. And I'm wondering, if you look at what's happening, the way regulators are taking a look at the crypto industry more largely, do you think they're going to clamp down to the point that it can no longer really exist?
I think that, with regulators, when something bad happens, like the meltdown of FTX was supposed to be the poster child of things done right, they always tend to overshoot a little bit. I think this is what we are seeing right now, but I am hopeful that this will be temporary. I do think that certain products, particularly in the United States, such as the earned interest product, will have a hard few months and maybe 1 or 2 years. That's why we took the difficult decision to, exit the U.S. market until clarity reigns again as to how these products are to be brought in a compliant way, because this ultimately is all that Nexo is about, bringing value to customers in a compliant way when clear guidelines exist, so that we can be part of the solution and not the problem, and to generate value in a sustainable way.
Antoni, when you take a look at the crypto industry, I posed to Twitter last year a question: could crypto have gone to its peak? Can Bitcoin have reached such heights without leverage, without the lending industry that helped support it? With so many lenders now stepping back from the industry, how much does an overhang does that place on pricing?
I think we saw the washout of leverage play out to, I would say, 90% already. So this is priced in the deleveraging of the space. I think I agree with your opinion that, leverage help propel Bitcoin at least from, 40, 50,000 to almost 70. These last bits were largely due to high leverage bets, and but this is true of all types of financial system. Even in TradFi, you have leverage in the system, and when it deleveraged, prices do go down. But the good news is that they've gone down so much that the leverage is all but gone, that the only thing that can happen from here, one could argue, is build up new leverage. So this might set us up for a nice bull run in the months and years to come.
Antoni, thanks so much for joining us. Great to spend some time with you. Antoni Trenchev there of Nexo. Now, coming up on the legal landscape in 2023, Sujit Raman, General Counsel at blockchain analytics firm TRM Labs.
And Bitcoin miners, they're pulling back. How the cash-strapped companies are dealing with the lingering crypto winter.
Plus, to access all the latest data and news on crypto, check out CRYP Go on your terminal. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller with Shonali Bassett. Kaylee Lyons is on assignment. Now, the former engineering chief of FTX is the latest member of Sam Bankman-Fried's inner circle to seek a cooperation deal with prosecutors. Bloomberg has learned that Nishad Singh met with federal attorneys last week. A Singh cooperation deal would leave Bankman-Fried increasingly isolated because two former FTX executives are already working with prosecutors. Joining us to talk more about this is Sujit Raman, a former DOJ official who's now general counsel at blockchain analytics firm TRM Labs. Sujit, thanks so much for your time. What do you think about how many more FTX executives can cut deals? It strikes me that the prosecutors won't really need much more testimony after they've got these three.
That might be right, Matt. But I'll tell you what's really interesting here is the government has brought this case pretty quickly, right? The news became public about FTX's bankruptcy in early November, and within a few weeks, prosecutors had brought criminal charges. That is extraordinarily fast when it comes to federal criminal cases. And so I suspect they are looking to have as many cooperators as they can, because as you know, in the indictment, they've essentially alleged that FTX was a fraudulent enterprise from the very beginning, from 2019. So the more people that you have coming in who can testify about what was going on at the very beginning, all the way through to the present day, the stronger the government's case becomes. So if you're just not building on documents or text messages or other kinds of electronic evidence, you need human cooperators to come in and help explain to the jury, if this case goes to trial, exactly what was going on and for how long. So I do think it's important for them to keep building their case as they go forward.
How complicated is the international nature of this case? Something that struck me when I was sitting at the courthouse last week was this question of where the bankruptcy was filed first and kind of a uncertainty around the prosecution and defense about why that mattered in a case like this. A lot of their activity was not in the United States. How does that conflict with what the DOJ is trying to do?
It's a great question, Shonali. I mean, really what's important here from a prosecutor's point of view is building evidence, right? Building building the criminal case. And the more evidence that's held outside of the United States, the more challenging it can be, and the more important it is to have human cooperators who might have their own access to evidence or their own materials that they can share with prosecutors as part of a cooperation agreement. So the more that evidence is held outside the U.S., the more that there has to be international cooperation between law enforcement agencies, the more potential there is that certain evidence is just gone, that you can't access it. So I suspect that's something that prosecutors and investigating agents are working on as we speak, building those relationships, getting access to that evidence, and continuing to build their criminal case.
Well, and jurisdiction is a question as well, isn't it, Sujit? I mean, as Shonali said, you know, a lot of these crimes were committed, alleged crimes committed outside of the U.S. And the victims also were not Americans in the majority of these cases. Doesn't that make the DOJ a little bit concerned about trying to bring the full weight of the law to bear against FTX here in the U.S.?
Matt, it could, and that's a really good question. And I suspect the defense, if they get to the point where they're filing motions and trying to dismiss the indictment in this case, one of their arguments will be that even if there was criminal activity, it didn't impact the United States or it didn't touch U.S. jurisdiction. I think prosecutors' response to that's going to be, you know, they've charged the wire fraud statute, which is a very broad statute, and essentially if any wire touches U.S. infrastructure in any way, that's enough to get you venue. That's enough to get you jurisdiction. And they'll make arguments, Matt. I mean, you pointed out the international victims, the international retail users. You're absolutely right about that. But there are also allegations in the indictment about U.S.-based investors, allegations that FTX misled investors, including those based here in the United States, about the nature of the business, about the nature of the funds, and where the funds were being custodied. So I think there are certain charges that are easier to defend on jurisdictional grounds. There are going to be certain charges that I think are harder for the government to defend on jurisdictional grounds as well.
Sujit, when you look at kind of the global nature of crypto itself, the reality is the biggest exchange in the world is not in the United States. And so when the DOJ, the SEC, the CFTC, as they try to wrap their arms around this industry, how difficult is it for them to get a handle on things when so much activity has moved offshore?
It's a very good question, Shonali. What I would say is it's actually become a little bit easier now. 3-4 years ago, when I was at the Justice Department helping oversee cryptocurrency enforcement efforts, many of the leading entities were completely uncooperative with regulators or with law enforcement. Their view was that if you don't have jurisdiction over me, I don't owe you anything, I'm not going to do anything for you. And that created an environment in which a lot of illicit activity was taking place in crypto. I do think that attitude has changed. Most of the leading players in the industry, even if they don't subject themselves to U.S. jurisdiction, have made it a point to say we will cooperate with U.S. law enforcement or with European law enforcement or with law enforcement around the world in building cases when it comes to fraud or child sexual abuse materials or ransomware. I think they recognize that it is important for them to be responsible players when it comes to law enforcement issues, because otherwise you're just going to trigger the ire of those law enforcement agencies, and that's not a good situation for any of these entities. So I do think actually the situation is better today than it was 3 or 4 years ago.
Sujit, thanks so much for your time. Appreciate you sharing some of your insight with us. Sujit Raman there of TRM Labs and formerly with the Department of Justice. Be sure, by the way, to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore the stories and people shaping the ever-evolving digital landscape. Look for that every weekday wherever you get your podcasts. This is Bloomberg.
Welcome back to Bloomberg Crypto. I'm Shonali Bassick with Matt Miller. Kaylee Lyons is on assignment. We're going to get to some stories now that caught our attention this week. Bitcoin miners are deleveraging as the industry continues to weather a plunge in digital asset pricing. Miners like Marathon Digital are reducing loans and scaling back operations. They need to pay back the billions of dollars in debt financing they raised during the bull run in late 2020.
Funding for crypto startups has fallen to the lowest level in almost 2 years. That's according to research firm PitchBook. Venture capital firms invested $2.3 billion during the fourth quarter of 2022, and that is a 75% drop from the same quarter in the previous year.
Then there's former FTX president Brett Harrison. He's prepared to share what he knows about the firm in time. He commented in response to a tweet over the weekend. Harrison has not been accused of any wrongdoing and stepped down as FTX US president last September. He's been reportedly seeking funding to create a crypto software company. Now remember, Brett was one of those folks that was former Jane Street, former Citadel Securities. A lot of Wall Street knows him.
Yeah, absolutely. And he stepped down, but essentially moved to the FTX US office in Miami, right? And I actually asked SBF about his departure, and Bankman-Fried essentially said, it's all good, we're still friends, he just wanted to move on. So it'll be interesting to hear why he really left and what he knew and when.
You know, a few months before all of this is interesting. I showed up at Skybridge Assault Conference. Remember, FTX has a relationship. This is days after that investment was made. Sam Bankman-Fried was not there. Brett was there. So clearly they operated a little separately, but I really wonder how now Brett feels after all of this and how he's going to raise money from here.
Well, as soon as he finds out, we're going to share it with everybody else. Join us for more Bloomberg Crypto next week at 1 p.m. Wall Street time. This is Bloomberg.